Welcome to the deep dive. Today we're diving into Karur Vysya Bank,
KVB.
KVB,
Yeah,
and their performance in Q3 of fiscal year 2025.
right.
We've got their investor presentation
Hmm.
and their financial reports ready to go.
Okay.
And I think you'll find their story pretty interesting, especially given the current economic climate.
Yeah, it is a tricky landscape out there,
For sure.
but KVB is navigating it remarkably well. I think
Yeah.
their performance this quarter is really something.
Let's start with some of the headline numbers.
Okay.
16% year-on-year growth in deposits,
Wow.
a 14% expansion of their loan book, and they even exceeded their net interest margin target,
Right.
hitting 4% for Q3.
That's impressive.
Pretty good.
Yeah, not bad at all, especially considering the context.
Right.
We're seeing rising interest rates, tight liquidity in the market, and there's this underlying anxiety about a potential economic slowdown.
Yeah.
Yet KVB is pushing forward.
Yeah. And they even snagged a few awards recently from Asocam. Best ESG initiatives, digital performance, and customer experience.
It seems like they're doing something right.
It suggests they're not just focused on profit, but on building a sustainable and customer-centric operation.
Yeah, for sure.
Those awards are definitely noteworthy. It makes you wonder, could KVB actually be on the verge of becoming a major player in the Indian banking sector?
That's the question we're going to explore today.
Yeah.
And one of the first clues lies in their strategic shift away from corporate lending and towards what they call the RAM segment,
Right.
retail agriculture and MSME.
Okay.
They're seeing significant growth here, over 20% year on year,
Wow.
with a focus on what they call granular secured advances.
So they're not chasing those big corporate loans anymore.
It seems not.
Instead, they're spreading their bets, focusing on a wider range of borrowers.
Yeah, that's right.
What's the thinking there?
Well, it's a savvy move for a few reasons.
Okay.
First, the RAM segment, particularly the MSME sector, is considered the backbone of the Indian economy.
Right.
It's got a huge potential for growth.
Yeah.
Second, focusing on secured lending is a way to mitigate risk, especially in a volatile economic climate.
Okay.
They're emphasizing mortgages and have seen a particularly interesting surge in jewel loans.
Jewel loans. That's a bit old school, isn't it?
It might seem that way,
Yeah.
but it's a market with significant demand, especially for agricultural needs.
Interesting.
Now, the RBI recently tightened the rules around gold loans.
Right.
So it's important to see how KVB is adapting to those changes.
Yeah, for sure.
So far, they've been very careful to ensure full compliance.
So it's not just about jumping on a trend.
Exactly.
They need to navigate the regulatory landscape carefully.
Yes.
And what about their other initiatives? What else are they doing to streamline their operations?
They've made some smart moves. They merged their branch and open market channels to create a more efficient system for sourcing retail business.
Okay.
They've also brought in a leading consultancy firm to help optimize their commercial banking.
Interesting.
Specifically, their approach to the MSME segment. It shows they're not afraid to seek outside expertise to fine-tune their strategy.
Smart.
Yeah,
It sounds like they're really trying to tighten up their operations and find new avenues for growth.
that's right.
But let's talk about a challenge that's facing not just KVB, but pretty much every bank out there. Deposit growth, or rather the lack thereof.
Right.
Everyone's talking about how tough it is to attract those low-cost CASA deposits right now.
It's a big challenge.
What's KVB doing differently?
They're tackling it head-on with a two-pronged approach.
Okay.
First, they've created a dedicated sales acquisition channel and strengthened their branch sales teams
Okay.
to actively go out and attract new customers, especially those who can bring in those low-cost deposits.
So it's all about boots on the ground, going out and making those personal connections.
Exactly.
Okay.
But they're not just focused on new customers.
Right.
They've also launched what they call a Reconnect program aimed at deepening relationships with their existing customer base.
I like that. It's not just about chasing new business. It's about nurturing the relationships you already have.
Absolutely.
But why is this Reconnect program so crucial right now?
Think about the current investment landscape.
Yeah.
People are pulling money out of traditional savings accounts and looking for higher returns
Right.
in things like mutual funds and real estate.
Yeah.
KVB is trying to counter that trend by showing their existing customers the value of staying put.
Makes sense. It's like a relationship checkup, making sure those long-term customers feel valued and appreciated.
Exactly.
But at the end of the day, it all boils down to profitability, right?
Of course.
And KVB is facing the same rising cost pressures as everyone else.
Yeah, that's true.
How are they maintaining their margins amidst all this?
Well, they're walking a tightrope,
Yeah.
but doing it well. They hit a 1.74% return on assets in Q3.
Wow.
exceeding their 1.65% target.
Okay.
And they're doing this despite increased operating costs.
Right.
A lot of that increase is due to strategic investments. They're expanding their branch network, beefing up their sales and service teams,
Ah,
and addressing something called AS15 actuarial provisions.
hold on. You're going to have to explain those AS15 provisions.
Sure.
What are those and why are they impacting KVB's bottom line?
Okay, so it's a bit technical, but essentially these provisions relate to how banks account for their pension and other post-retirement benefit obligations.
Okay.
Recent changes in discount rates have impacted these provisions, leading to higher costs for KVB.
Okay.
But they see it as a necessary investment for the long-term health of the bank.
So they're taking a bit of a hit now, but they believe it will pay off in the future.
Yeah, that's the idea.
And they're still committed to keeping that cost-to-income ratio below 50%, right?
That's right. They're very focused on efficiency. And their efforts are paying off in other areas as well, particularly when it comes to risk management.
Yes, risk management. That's a crucial piece of the puzzle, especially in a volatile market.
For sure.
What are they doing to keep those risks in check?
They're being very proactive. For starters, they've managed to keep their gross slippages under control.
Gross slippages.
Those loans that turn bad.
Okay.
We're talking a remarkably low 0.17% in Q3,
Wow.
which translates to an annualized slippage ratio of 0.68%. That's significantly lower than the industry average.
So they're really good at identifying and managing those potentially risky loans.
It seems so. They're also doing an impressive job of recovering funds from accounts that have been technically written off.
Really?
They actually managed to recover INR 175 crores
Wow.
from those accounts in Q3 alone.
That's impressive.
Yeah, and their gross non-performing asset ratio is below 1%,
Okay.
a sign of their strong asset quality.
Okay, so they're good at managing the downside, but are they being overly cautious? Are they missing out on potential growth opportunities by playing it too safe?
That's a fair question. Let's look at their lending practices for a closer look. They're being very conservative with unsecured lending,
Okay.
which makes up a tiny 2.42% of their total advances. And even within that, their buy now, pay later book, which is inherently riskier, is performing well.
Okay, so it's not like they're shying away from innovation or new lending models.
Right.
They're just being very selective.
Exactly. And their cautious approach extends to their microfinance lending as well. They're not rushing into every market. Instead, they're selectively partnering with business correspondents in states with proven track records of better recovery rates.
Interesting. It sounds like they're really taking a calculated approach to every aspect of their business.
Absolutely.
Okay, so we've covered a lot of ground.
We have.
And it seems like KVB is really hitting their stride.
They are.
But are they really on the cusp of becoming a major player in the banking industry?
That's the question we're going to tackle in the next part of our deep dive. We'll examine their guidance for the future, dig deeper into their financials, and see if their current performance is sustainable.
All right. Sounds good. I'm looking forward to it.
Me too.
Welcome back to our deep dive into KVB's performance.
Okay.
We left off with a question: can KVB become a major player in the Indian banking sector?
Yeah, big question.
To answer that, let's look closer at their strategic initiatives.
Okay.
They're shifting focus to the RAM segment.
Right.
But what does that actually look like on the ground?
Their investor presentation offers some interesting details.
Yeah.
Let's start with their retail portfolio, where mortgages and jewel loans are taking center stage.
Okay.
Jewel loans in particular saw a remarkable 49% year-on-year growth.
That's a massive jump.
It is.
But wasn't there something about the RBI tightening regulations around gold loans?
You're right to point that out.
Yeah.
The RBI did issue guidelines in September
Hmm.
to ensure responsible lending practices in the gold loan sector.
Okay.
KVB has been proactive in complying with these guidelines.
So it's not just about handing out loans based on the weight of the gold anymore.
Not anymore.
They need a deeper understanding of the borrower and their needs.
Precisely. And their efforts seem to be working. Despite these tighter regulations, their jewel loan portfolio is performing well with an average loan-to-value ratio of 66%.
Okay, so they're managing the risk effectively. What about their other retail products? Are they seeing similar success?
They're focusing on secured loans like mortgages and vehicle loans
Okay.
while maintaining a cautious approach to unsecured lending.
Mm-hmm.
And they're definitely leveraging technology to enhance customer experience.
In what way?
Their D-Lite app has garnered over 58 lakh downloads and boasts 27 lakh registered users.
Wow, that's impressive.
It is.
It sounds like they're striking a balance between embracing technology and managing risk.
Yeah, I think so.
Now let's shift gears to their commercial banking strategy
Okay.
and how they're serving the crucial MSME sector.
All right. Here, their focus is on granular secured advances.
Okay.
The average ticket size is around Rs 53 lakh.
Okay.
And interestingly, 62% of their commercial loans are for amounts less than Rs 5 crores.
So they're specifically targeting those smaller businesses that often struggle to access credit.
That's right, filling a crucial gap in the market.
But how do they ensure they're operating efficiently and effectively in this space?
Well, they've taken a proactive step by engaging a leading consultancy firm to guide their commercial banking strategy.
Oh, interesting.
This shows their commitment to learning and adapting to best practices.
Smart move.
Mm.
Now let's talk about the final piece of the RAM puzzle, agriculture.
Yeah.
What's their strategy in this sector?
Their agricultural loan book is growing steadily,
Okay.
primarily driven by those jewel loans we discussed.
Right.
They're also lending to farmers for other needs,
Mm-hmm.
being careful to comply with RBI guidelines.
So they're not just chasing high-growth opportunities.
Nope.
They're committed to responsible lending practices in a sector that's vital for India's economy.
Absolutely.
Speaking of responsibility, they mentioned recovering funds from technically written-off accounts.
Right.
How's that going?
That's another area where they're exceeding expectations. They managed to recover a significant sum of INR 175 crores
Wow.
in Q3 alone, which is a testament to their proactive recovery efforts. This has also played a crucial role in reducing their gross NPAs.
It's like turning lemons into lemonade,
Yeah,
finding hidden value in those written-off accounts.
exactly.
It's clear they're making smart moves,
Yeah,
but they're not operating in a vacuum.
right.
The economic environment is challenging for everyone.
That's true.
How is that impacting KVB?
You're right. The rising interest rates and tight liquidity are a concern for the entire banking sector. However, KVB seems to be outperforming many of its peers.
Interesting.
How so?
They've maintained healthy margins, kept their costs under control, and demonstrated strong asset quality.
So what sets them apart? What's the secret sauce behind their resilience?
Well, several factors are at play. Their strategic focus on the RAM segment is certainly a key differentiator.
Okay. They're tapping into markets with strong growth potential and being extremely cautious with riskier segments like unsecured lending.
So it's a combination of smart strategy, prudent risk management, and efficient operations.
Yeah, I'd say so.
They're not just riding the wave. They're making deliberate choices to navigate this challenging environment.
Exactly. And their efforts to recover funds from those technically written-off accounts are also playing a significant role in maintaining their asset quality.
Right.
They're not just sitting back and waiting for things to improve. They're actively finding ways to improve their position.
They even brought in that consultancy firm to optimize their operations.
Right.
It's impressive to see a bank so willing to adapt and evolve, especially a mid-sized player.
It is.
But they're not out of the woods yet.
Of course not.
They still face challenges, right?
Absolutely. One major challenge is that pressure on deposit growth.
Right.
While they've increased deposits by 16% year on year, a significant portion comes from term deposits,
Okay.
which tend to be more expensive than those low-cost CASA deposits.
So even with their impressive deposit growth, the mix isn't ideal.
Not really.
This could impact their profitability if the trend continues.
It could.
What else should we be watching for?
The potential for an economic slowdown is a concern for everyone.
Of course.
While KVB's asset quality is strong now,
Yeah.
a prolonged slowdown could lead to increased stress on their loan book,
Okay.
particularly in the MSME and agriculture segments.
So vigilance is key.
Yes,
They need to be prepared for any potential deterioration in asset quality,
for sure.
even though things look good right now.
Agreed. But overall, KVB seems well-equipped to face these challenges. Their performance so far suggests they have a clear vision and the agility to adapt to a dynamic financial landscape.
Before we move on to the final part of our deep dive, let's pause and reflect.
Okay.
As we've discussed KVB's performance, what aspects stand out to you? What's resonating the most?
Are you impressed by their focus on the RAM segment? Intrigued by their proactive approach to recovering funds? What's piqued your interest?
Take a moment to jot down your thoughts.
Yeah, think about it.
In the next part, we'll analyze their financial statements to uncover the numbers behind this impressive performance.
Right.
We'll also explore the potential challenges they face and the broader implications of their success for the Indian banking sector.
Good stuff.
Stay tuned. Welcome back to the final part of our deep dive into Karur Vysya Bank's Q3 performance. We've covered their strategy, explored their key business segments, and now it's time to take a closer look at the numbers that underpin their success.
Yeah, let's open up those financial statements.
Okay, their profit and loss statement is a good place to start.
Absolutely. We see a 14% year-on-year increase in total income,
Okay.
reaching INR 4,491 crores for the 9 months ending in December 2024.
Okay.
A significant chunk of that growth comes from a 12% rise in net interest income.
That aligns with their strategic shift towards higher-yielding loans in the RAM segment.
Right.
It seems to be paying off. Indeed. But what's equally impressive is their cost management. Operating expenses saw a modest 12% year-on-year increase. This resulted in a healthy operating profit of INR 2,377 crores for the 9 months, a 21% jump compared to the same period last year.
So they're growing their income while keeping costs in check. That's a recipe for strong profitability. What about their cost-to-income ratio?
It stands at a respectable 47.27%.
Okay, so they're generating strong income, managing their expenses well. But let's get to the bottom line. How's the profitability looking overall?
Well, their net profit for the 9 months ending in December 2024 reached INR 1,428 crores,
Okay.
a 24% increase compared to the same period last year. Their return on assets has also steadily improved, hitting 1.74% in Q3.
That's a solid performance.
Yep.
Now let's turn to their balance sheet. What are the key takeaways there?
Okay, so their total assets have grown by 13% year on year,
Okay.
reaching INR 1,016,373 crores as of December 2024. Their focus on secured lending is evident in their loan book composition, unsecured advances, which carry higher risk.
Right. Account for a mere 2.42% of their total loans.
That's a sign of their prudent risk management, especially given the current economic uncertainties. What about their capital adequacy ratio?
They're maintaining a healthy ratio of 15.91%,
Okay.
comfortably above regulatory requirements. This provides a strong buffer to absorb potential losses and supports their future growth ambitions.
Okay, so financially they're in a good spot.
Yeah.
But we've talked about potential challenges, particularly the pressure on deposit growth. Can you elaborate on that?
Sure. While they've achieved a 16% year-on-year increase in deposits, a significant portion comes from term deposits, which tend to be more expensive than low-cost CASA deposits.
Right, so even with impressive deposit growth, the mix isn't ideal.
Yeah, that's right.
This could impact their net interest margins, especially if interest rates continue to rise.
It's definitely something to keep an eye on.
So attracting those low-cost CASA deposits remains a key challenge for KVB,
Right.
just as it is for other banks. What other potential headwinds should we be aware of?
Well, the looming economic slowdown is a factor we can't ignore. While their asset quality is strong now, a prolonged slowdown could put pressure on their loan book, particularly in the MSME and agriculture segments.
So they need to be prepared for potential bumps in the road, even though they're performing well right now.
Absolutely. But overall, their proactive risk management, strategic focus on the RAM segment, and commitment to operational efficiency position them well to weather these storms.
It seems like KVB has a bright future ahead. Their journey is a testament to the fact that success isn't just about size. It's about making strategic choices, managing risks, and building strong customer relationships.
I completely agree. Their story reminds us that sustainable growth is possible even in challenging times, as long as you have a clear vision, the agility to adapt, and a commitment to serving your customers.
Well, there you have it.
Yeah.
We've explored KVB's financial performance, analyzed their strategic choices, and considered the broader implications of their success.
We hope this deep dive has equipped you with the insights you need to form your own informed opinions about KVB and its future prospects.
Remember, the world of finance is constantly evolving. There's always more to learn. So stay curious, keep exploring, and join us next time for another deep dive into the fascinating world of business and finance.